If you've been fortunate enough to receive any PPI payouts over the last couple of years due to having credit cards and loans, etc., then you might not realise that you paid tax on the interest element of that PPI payout. In this video, I'm going to show you exactly how you can claim that back if you're self-employed using your self-assessment tax return. But as always, before we get started, please don't forget to subscribe to the channel down below and click on the bell icon to be notified of any new updates, and also leave me a big thumbs up if you enjoy the content and it's helped you out at all, as this will help the channel massively and push this video out to more people who need to see this information. Okay, so let's get started. So the first thing we need to do is take a look at Martin Lewis's blog on the Money Saving Expert, and I'll leave a link to this blog post down below. But basically this is just general information about having a PPI payout and if you can reclaim the tax on it, and things such as why tax is taken off PPI payouts, etc. So you can read through this at your own leisure. This is mainly aimed at those people who are pay-as-you-earn taxpayers. If you are a pay-as-you-earn taxpayer, then it's really straightforward for you guys. All you need to do is go to this web page here on the gov.uk website and complete this form, which is an R40 form, and this will get that tax paid back to you via a tax rebate. If you're self-employed, it's a little bit more difficult to do, and it did take me quite a while to find out how to do this. So hopefully this video will save you a lot of time and trouble. So basically all you need to do, guys, is go to this page here, which is self-assessment tax returns. You need to click on this link here if you need to change your return. Scroll down a little bit, down to online tax returns. Click on the point number 1, sign in using your government gateway ID. Then we'll click on sign in. Once we're signed in, we need to scroll down a little bit and go down to amend self-assessment tax return for 2019 to 2020. This is the one I'm going to be doing. You might want to go back a year prior to this perhaps, but for this example we're going to use last year. In the right hand menu here we've got a couple of options. If we go down to number 4, fill in your return, click on that. Then we've got all the details of the previously completed tax return. We want to scroll down to where we see UK interest, click on amend UK interest, etc. And there's a box here that says taxed UK interest, etc. And this is where we're going to enter the interest element that we've paid tax on. Now this is the net amount after tax has been taken off. So you can see I've already got a figure in here. But the way we find this figure is if you have received your PPI payment already, then you will have received a letter from the company that's paying you. Here's the letter I've got from the Halifax. So basically this is the offer letter of the amount that they're going to pay me out in PPI. What we want to do is we want to scroll down further in the document. I think it's on page 5 in this particular document, and here we can see a breakdown of how this payment was calculated. And we can see here there's a section that says compensatory interest for £1,025.74. So this is the amount of interest that I've been paid from the PPI, and this figure down here is the amount of tax I've paid on that interest, £205, which is 20%. So the figure we need to add to our tax return is basically the net of these two figures. So this total amount of interest less the amount of tax we paid, so the net amount after tax. So if we just open a spreadsheet, and we'll just copy this figure here, and we'll just open a spreadsheet. That's £1,025.74, and then we want to take off the tax, which is £205.14. So we'll put this here. So the net amount after tax is £820.60. So this is the figure that you will enter into this box here, £820.60. Now obviously I'm not going to do this because I've already used my calculation and submitted my return, but just so you guys know, so if you've got a number of PPI claims and you've had a number of payouts over the last year and the last 12 months. Basically, you just add up those figures and put them all into that box, along with any other interest from UK banks, etc. So that's as straightforward as it is if you use online returns for your self-assessment. If you like to do it the old-fashioned way and you fill in a paper return, basically you will go down to page TR3 on your tax return, this page here, and at the very top of the page we've got income, and we've got interest and dividends from UK banks and building societies, and we've got taxed UK interest, and then we'll put that figure in here again. Now you will also need to put a little note on your account when you submit your tax return, just to say that the figure in that box is for PPI, for interest paid on PPI. So just make sure you leave that note when you submit your tax return. So that's it, guys. It's as simple as that, and you know, as obvious as it seems, it was a bit of a struggle for me to find out where to actually put that figure. Now, I spoke to the Inland Revenue twice, two separate occasions, and both times I was on hold for an hour, and when I finally got through, both advisors, as nice as they were, couldn't really help me. Both of them told me to look at this R40 form and complete that and submit that, and that would suffice. But as I explained earlier, that's for pay-as-you-earn taxpayers only. If you're self-employed, then this is the way you do it. So hopefully that's helped you out somewhat. Hopefully you can get a tax rebate on any tax you paid on PPI going back up to 4 years. Take a look at that blog post from Martin Lewis. I've left a link down below. And if it's helped you out, then please leave me a big thumbs up and leave any comments down below. Thanks again for watching, guys, and I'll see you in the next video.